Hello everybody, welcome back to another valuation investing video, and today in this video I'm going to be going over Adobe stock once again because I want to get into if Adobe stock, is this stock dead for the future, and can this company actually rebound, and can this business model actually continue to actually create money in the future, not only for the company but for investors. So with that being said, we're going to be getting into this video, taking a look at the fundamentals in their recent earnings, then taking a look at the intrinsic valuation of this company. So with that being said, looking at Adobe stock here, as we can see over the past 5 years, this company has been doing terrible. Negative 29% returns over the past 5 years. The S&P is up about 70% over the past 5 years, so severely underperforming the market. And taking a look here at Adobe and taking a look at how they make money, if you don't know, it's mainly through subscriptions in its three main cloud services. First one, Creative Cloud, which is the monthly or annual fees for design software like Photoshop, Illustrator, and Premiere Pro. If you don't know what Photoshop is, it's basically just a photo editing app that I don't know how you don't know it. It's very huge. A lot of people know it. Also, Premiere Pro is a video editing service. Taking a look at the other segment is Document Cloud, which is subscriptions for PDF tools like Acrobat and e-signature services like Adobe Sign. They also have Experience Cloud, which is the large enterprise subscriptions for its marketing, analytics, and data management software, which, like I said, most of their revenue comes from these recurring subscription fees. And with that being said, the final definitive shift for Adobe's flagship creative products took place in May and June of 2013 with the launch of Creative Cloud. If you didn't know, Adobe actually wasn't originally subscription-based model, and ever since they did that, this company has been growing at a very consistent, predictable, and very good rate. And as we can see here, the main reason was, like I said, stable and predictable revenue. The old model relied on unpredictable revenue spikes. Whenever a new version of the Creative Suite was released, the subscription model created reliable, high-margin, annual recurring revenue. So this is the one thing I do like about Adobe. They have subscription-based model, which is recurring revenue, and as long as subscribers don't leave, then Adobe is going to continue to grow at a very good rate, and it will continue to grow predictably, and they have shown no signs of slowing down. So with that being said, taking a look at why the stock is actually down, like we said, the growth isn't necessarily slowing by that much. It's slowing slightly, but they're still growing at a very decent pace, near 10%. The main reason for the decline in Adobe, I think, is concerns over AI monetization with their new AI at Firefly. There's some skepticism of how this is going to be monetized and how it's actually going to help the business. Also, increased competition from other cheaper alternatives. Also, a bunch of competition with AI. As we see, Google Gemini just had Nano Banana, which is very similar to Adobe Photoshop, where all you have to do with Nano Banana is tell Google Gemini what to do, and it'll create the image. So people are worried that Adobe is going to be a dying business due to just basically, you could just ask AI to do whatever you want and they can make that picture for you, and Adobe is reliant on the user using the app. So with that being said, I actually do believe that it could disrupt Adobe, but I don't think it's going to disrupt them that much. I believe, honestly, Adobe is still looking decent. They're still growing great. And I think the main thing that's good for Adobe is that I think us humans really enjoy being able to put our own mind to work and not just asking something to do, say, Photoshop an image. If we have full control, we're more likely to use it because it's more reliant. We know what we want. Google Gemini or any AI Photoshop editor might not know exactly what we want. So I think for the time being, Adobe's in a decent area. Obviously not great because of the competition, but I still think, honestly, Adobe still has a place in the future. Plus, underwhelming guidance at times has been pretty bad and slowing growth expectations. As we can see with their recent earnings, Adobe did get a nice boost after that earnings. It wasn't great, but they did go up slightly. Revenue of $5.99 billion versus expectations of $5.91, and adjusted earnings of $5.31 versus expected $5.18. So this company continues to grow every single year, quarter after quarter, they seem to increase at about 8 to 10%. So there's nothing wrong with this earnings, and their full year forecast continues to go higher, as we can see with the revenue in basically every segment. The adjusted earnings per share continues to go higher with their guidance. Everything looks good for Adobe. It's just the entire sentiment around this company with the doubt of the future, in which the stock market does not like uncertainty, which is why I believe Adobe's not doing well. And with that being said, looking at the competitors here, we also have to include AI, which I think AI is the biggest competitor, but we do obviously have Canva, which I'm using right now. Canva is a nice app. It's cheaper and it's very user friendly. Adobe's a bit more professional, so that is an interesting take. CapCut, obviously CapCut I also use over Adobe Premiere because CapCut's cheaper. These products are cheaper and just not necessarily better, but they're cheaper, and for a beginner it's a lot easier to use. Also, you have Figma, similar to Adobe Photoshop. So with that being said, let's go over to market-io and take a look at the SWOT analysis. Taking a look at the SWOT analysis for Adobe here, I want to take a deeper look in the strengths and weaknesses for this company. Here we have strengths: AI-driven innovation leadership with their new Firefly. This could really help them dominate and continue to accelerate like other AI companies, and this could help them stay in the race and potentially outperform other AI companies in terms of basically their editing softwares. Also, dominant market position in creative software. They're the standard for this, and almost every professional filmer or professional editor or professional, basically anything professional in the media segment will most likely be using Adobe. Also, strong financial performance. They continue to still grow at a very decent pace, and their guidance continues to still do well. And I think that's the main thing with this company. However, weaknesses: high product pricing. Their pricing is very high compared to other competitors, but I do think that people are still definitely willing to pay it. As we can see with the earnings, they're still willing to pay unless something else crazy comes out that can compete against this company. They're still continuing to charge these high prices and continue to get that money. Also, we have potential subscription fatigue. We have competitive pressures. Like I said, I think this is the biggest weakness with this company and threat to the business. So taking a look at Adobe here on my valuationinvesting.money website. If you want to go check it out, just look up valuationinvesting.money or take a look in the description. And it's 7-day free trial, and it's only $8 per month, and I think it's worth it. Taking a look at Adobe here, looking at the market cap, almost 140 billion. So this is a very large company. PE ratios look very low for the growth of this company, in the mid-teens for the forward PE ratio. That's very low. So you're paying $16 for $1 of future earnings per share. The market average is anywhere from 20 to 25. So this is a definitely undervaluation compared to the market. But you have to think, will this company be able to grow similar to the market? Because if you don't think they're going to be able to grow similar or outperform the market growth, then there's no reason to be paying a low valuation, because this is dependent on the future growth. Also, the free cash flow yield, this is great also. 6% free cash flow yield, that's very high. And that just shows that you're getting a good percentage of free cash flow when you buy this company. Also, the net cash balance isn't too bad, negative 720 million. So they do have more debt than cash, but not much. So this still looks good for Adobe. Going over to the 7-step stock analysis, this is why I like it. I like Adobe a lot. The fundamentals look good. It's just the question about the sentiment around this company, and do you truly believe Adobe can continue to grow in this competitive environment with AI coming out and also all these cheaper alternatives? As we can see, 7 out of the 7 key metrics. Forward PE ratio, very low. Return on invested capital, they're very efficient at reinvesting back into their business. The growth rates still look pretty decent, near 10%. Shares outstanding, they keep buying back a lot of shares, and as of late they've been buying back even more as the stock continues to go lower. The debt to free cash flow, very good. Less than 1 means they can pay this off in less than 1 year. Everything looks good for Adobe here. So going over to my intrinsic value calculator here, let's put in some assumptions. So for the bear case, I'm gonna put in, let's do a 5% revenue growth. Base case, I'm gonna do 7.5. Bullish case, let's do a 10% revenue growth. They're growing at 8 to 10% right now. I do expect it to slightly decelerate in the future, but not by much. The future profit margin right now, their profit margin's at 30, but I do think this might decrease as a result of competitive pressures. So with that being said, let's do bear case 24. base case, I'm going to do 28, bullish case 32. So the bullish case is assuming that their Firefly really helps this company and continues to accelerate growth and actually accelerates growth from today. So with that being said, for the future P ratio bear case, I think a P ratio of 15 is fair. Base case, I'm going to do 20, bullish case 25. Now for the shares outstanding, I think bear case, they're going to actually buy back. Let's do 2%, base case 2.5, bullish case 3. They've been buying back insane amounts lately, and I think that's going to continue to happen. So as we can see here, with the base case, I get a 7.5% return with Adobe. And to be honest though, these are very conservative numbers, so keep that in mind with the base case. I honestly think these are conservative. So if I put actual base case numbers, I like to be conservative, but if we put something like 9% growth and say the profit margin remains the same, let's see what I think we can make. 10.5% annual return, not too bad. But me personally, I think there's better opportunities in the market right now. Instead of buying Adobe at a 10.5% return, I think you can get some better opportunities and with less risk for the future of the company. It still looks attractive, don't get me wrong, but with this, I'm still just concerned about the future of Adobe, and at this price, it doesn't seem at a good enough valuation for me to be buying today. So thank you guys for watching this video. Please subscribe, hit the like button. If you want to go check out the valuation investing website, please click right here. Thank you guys for watching this video, and see ya.